Last trading week closed on a rather positive note. Investors cheered at the news that US inflation has finally slowed down. Notably, inflation eased more than the markets had expected, and this made traders think that the Fed might soon slow the pace of its aggressive monetary tightening. Against this backdrop, US stock markets gained support while the US dollar depreciated. The US dollar index, which demonstrates its value against the basket of 6 major currencies, slumped to the level of 106.40 points. Last week was the worst one for the US dollar traders since March 2020, when the pandemic was raging. Now markets anticipate the Fed to raise the rate by just 50 basis points in December, instead of 75 as it has been in the last few meetings. Traders are now evaluating the difference in the monetary policies of the two central banks. Given that the European Central Bank is determined to fight inflation, the euro will surely get strong support. At the close of the previous weekly session, the euro-dollar pair gained more than 4% and settled firmly above the parity level. However, European assets may not be so attractive to investors amid the looming energy crisis and the threat of a recession. The macroeconomic data coming from the UK is also rather disappointing, as the UK economy is on the verge of the economic downturn. The inflation rate in the United Kingdom is running at a 40-year high, while the Bank of England has stepped up the pace of the monetary tightening. In addition, investors are closely watching the situation around the political crisis in the UK, where local businesses lost their chance to get tax relief. The pound, just like other major currencies, took advantage of a weaker US dollar and advanced by 4.5%. The Japanese yen also seized the chance to strengthen against the greenback. The dollar-yen pair dropped by 5.5% below the level of 140 yen per dollar, thus bringing the yen to its 2-month high. The yen also advanced on recent remarks by Bank of Japan Governor Haruhiko Kuroda, who hinted at a possible adjustment in the yield curve control policy if the achievement of the 2% inflation target comes into sight. Besides, traders prefer to keep the yen as they expect Japan's monetary authorities to make another intervention in the currency market. The Ministry of Finance revealed that it spent about $90 billion in its first intervention since 1998 on September 22, and an additional $43 billion between September 29 to October 27 to support the currency further. Gold traders also managed to bring back almost all of their previous losses. Last week, the price of gold reached its highest value in 3 months and traded at $1,660 per troy ounce. Yet some analysts think that this could be a temporary advance. As soon as the key central bank raises the rate once again, gold quotes will enter correction and return to the area of $1,700 per troy ounce. Meanwhile, oil traders couldn't take full advantage of the weakening US dollar. The price of Brent crude declined by 1.32% over the past week and stood at $95.72 per barrel at the close of the weekly session. In the middle of the week, oil dropped to $92 per barrel on the data signaling that a recession is looming. Yet the news that China was going to ease coronavirus restrictions restored hopes for robust fuel demand and pushed the Brent quote up to the level of $97 per barrel. And we will keep you informed about the changes in financial markets in our regular video reviews. Please subscribe to our channel, like and leave your comments down below, and follow us and stay up to date with all the news. See you soon!